Here is an example of an aggressive uptrend being reversed by a declined double top. The downswing points mark clear resistance in the 42 to 43.50 range. The second downswing is a bearish engulfing, forming slightly below the highs of the first downswing. That was a dark cloud cover candle pattern. Short-term developments are returning to a bearish stance following a normal bullish retracement back to the double top's lower boundary. In spite of the heavily bearish context, DKNG has been able to form a stable uptrend to counter the declined double top and persistent selling that followed. This is a less common occurrence but highlights patterns aren't always a guarantee of major reversals, even if they are heavily bearish, such as with this declined double top that even had high volume at all the crucial points. Part of this is due to the longer-term uptrend and the aggressive incline in late May that had a major impact. Many buyers in mid to late May did not sell out of their positions upon a return back to the 30 boundary, as seen with generally lower volume in July and early August. Selling continues with a few noticeable red spikes, but they are never sustained for a longer drop like in late June. A crucial break to newer highs will see 43.50 to 42 reverse rolls to present support to any bearish retracements. Attention from all time horizons is focused on whether the old declined double top highs and the uptrend line will reverse the recent correction to continue the climb to newer highs with another aggressive incline. Selling pressure weakens but remains consistent to breach the convergence of support and put the double top's lower 35.60 boundary back in the spotlight. The market doesn't go on another sharp bullish incline but shifts to a neutral to moderately bullish tone in the long term, as DKNG returns back to trying to establish over the double top's upper boundary. Incidentally, the crucial upswing off 35.60 intersects with a downtrend line from the double top, which is less common, though it does happen as seen with other examples where trend lines from clear patterns continue to influence reversals even after being crossed. Trend lines from patterns are generally longer lasting even after being crossed compared to regular trend lines drawn from swing points that aren't part of patterns. It is also a good reminder to adjust the lower uptrend line to line up with the new upswing point, as it is a key reversal in the medium to long-term context.